This is Lecture 2.2, Analyzing How Transactions Affect Accounts. This is found on page 32 of your book. So what we need to do now is look at some transactions that you will have very often. Okay, so these will come all the time, and we need to see what happens to our T accounts when certain things happen, when certain transactions happen. So this is what your transaction will look like. It will give you a date and then what happened and the amount of money that was involved. Okay, so it says August 1st, we received cash from owner as an investment, $5,000. Okay, so there's 4 questions that we always want to ask ourselves. And some of these you'll be able to memorize. You just know, okay, cash we'll use and owner's equity we'll use, and you'll just know exactly how to do it because you'll do it so often. But when we start getting into more difficult transactions, you're going to want to make sure you know these 4 questions. So I'm going to quiz you over these often and make sure that you know what questions you should be asking yourself, okay? So the very first thing you do when you see a transaction is you ask which 2 accounts are affected, or which accounts are affected. Okay. Then you need to ask, how is each account classified? Asset, liability, or owner's equity? How is each classification changed? And how is each amount entered into the accounts? Okay. So the first question we're going to ask is which accounts are affected, and we know that cash will be affected and that capital, owner's equity, will be affected. And in our book you will realize that Kim Park is the owner of our business, and so that's why the account is called Kim Park Capital. Okay, so 2 accounts have been affected, cash and Kim Park Capital. How is each account classified? Well, cash is an asset and Kim Park Capital is an owner's equity account. How is each classification changed? We know that because cash is an asset, the normal balance side is a debit, and that is the side that increases. So this will be increased by $5,000. And we also know that the credit side of Kim Park Capital is a normal balance side, so $5,000 will be increased on the credit side. Okay. Fourth, we need to put $5,000 into the cash debit and $5,000 into the Kim Park Capital credit. Just another transaction here. August 3rd, we paid cash for supplies. Okay, so the first thing I'm going to ask myself is which accounts are affected. I know that I'm going to use cash, one account, and supplies as my other account. Okay, how is each account classified? Well, I know that cash and supplies are both assets to my business. So both are going to go under the asset side of my accounting equation, or my accounting equation T account. So the first thing I'm going to do is look at which, how each classification is changed. So how I like to think about this, and I think I talked about this in chapter 1, for some reason my brain works where I think of it as piles. So I have a pile of cash, a pile of supplies, a pile of insurance, a pile of whatever it is, okay, and I need to think about, is my pile getting bigger or is my pile getting smaller? So if I'm paying cash and I have this pile of cash, if I'm paying some of it to someone else, my cash pile is decreasing, okay? If I'm gaining supplies, if I'm going to go add supplies to my pile, my supply pile is going to get bigger. So I need to look at which part of supplies is going to be the increase side, which would make my pile get bigger. And I know that on an asset account, the increase side is the debit side, so I am going to increase my supplies and decrease my cash. Now this would still stay in balance because we've gone up 275 and down 275, meaning a 0 balance on my asset side. Okay. So each classification is changed. We did that. How is each amount entered into the accounts? We did that right here. Supplies, we're going to do a debit of 275. Cash, we're going to do a credit of 275. The next transaction we have is August 4th. We paid cash for insurance. What 2 accounts are affected? Cash and prepaid insurance. Okay, here's my 2 accounts. Again, how is each account classified? Both of those are assets to my business. Okay, so they are assets. They both go under this left side of the accounting equation. How is each classification changed? Well, I know that if I'm going to get more insurance, then my insurance pile is going to go up, but if I'm paying cash to someone, then my cash pile is going down or decreasing. Okay, so I have the amounts entered would be $1,200 under my prepaid insurance debit and $1,200 under my cash credit. Next one, August 7th, I bought supplies on account from Supply Depot. Now again, these are all in your book. Okay, I'm just going page to page to page. So received cash as an owner as an investment was on 32. Paid cash for supplies was 33. On page 34 was paid cash for insurance. Now we're buying supplies on account. Now we're on page 35. So this is the same thing as page 35, but there might be some extra helpful hints maybe, or some reading that you could do that would help you understand this if you're not getting it now. Okay. So on August 7th, I bought supplies on account from Supply Depot. So what that means is instead of going into Supply Depot and bringing my $50 bill with me or my $500 with me, I don't have that, and my boss said, why don't you just go to Supply Depot, get the supplies, and have them bill me. That's what on account means. So I need to think about which two accounts are affected. I know supplies, because we've already done that when we paid cash for supplies, but the other account that we need to look at is accounts payable from Supply Depot. Okay? So what that means is I owe them money, because they've given me supplies. I haven't given them any money. I got $500 worth of supplies, but they are going to bill me later. Okay, so how is each account classified? Supplies is an asset. Accounts payable is a liability because I owe it. Okay, so each classification has changed. My amount of supplies is going up. Okay, and the amount that I owe them is going up. First, I owed them $0, so $0. So my pile of what I owe was at nothing. Now my pile of what I owe is bigger. There's $500 worth of what I owe to them. So this can get a little confusing when you start getting into owing someone something, because you would think that maybe that would go down, but it doesn't. The amount that you owe them has increased. Okay, so you have a credit of 500, or you have a supplies debit of 500 and an accounts payable credit of 500. Okay, last thing here, we're going to pay cash on account. So now we've gotten the bill, and my boss says I have $300 to pay to Supply Depot to get our balance, closer back to zero. So on August 11th, we've paid cash. So which two accounts are affected? Cash and accounts payable. How is each account classified? Cash is an asset. Accounts payable is a liability. We owe money. Okay. How is each classification changed? Well, if we pay cash, our amount of cash is going down. Okay, and now the amount we owe them is going down. We're taking $300 of that $500 away. So what our pile used to be was $500. Now there's only $200 left in there, and so our amount we have owed has decreased. Okay, and how is each amount entered? We have we have an accounts payable debit of $300 and a cash credit of $300. Remember, your debit always goes first, so when we start journalizing, which you'll make sense to in a little bit, we always say our debit first and our credit second. Okay, for 2-2 lecture, you need to know what a chart of accounts is. Remember, that is back, I think it's on page 3 of your book. Yep, page 3 of your book, and that will show you all the charts of accounts that you have for this chapter.